In this presentation, we're going to be recording a deposit from an owner, which is showing up in the bank feeds within QuickBooks Online. Here is our Get Great Guitar file. We're going to be opening up our report first. Let's just open up one report this time. This is going to be our balance sheet report. So we're going to be opening up the balance sheet report. We'll change the dates up top. So we'll be scrolling up top, changing the dates from 01/01/20 to 12/31/20. Going to go ahead and run that report. But then I'm going to right click on the tab up top and duplicate that tab. Duplicating the tab up top. Going back to the left then, we're going to be going to our banking. So we're continuing on with our banking. Now we have our deposits. We entered our deposits last time that dealt with customers. And hopefully most of the deposits we have, I'm closing up the hamburger up top. Most of the deposits we have will be from customers. That's going to be the assumption. However, it might be the case that we as the owner put money into our business account as well because we want to expand or something like that. And therefore, we need to break those out. We need to recognize those in our system. When I see a deposit that I know is from the owner of the business, we need to differentiate that from a deposit from the customer, because if we don't, we're just going to apply the same system and we're going to end up recording that as income. And that will look bad. That'll be bad for taxes because we'll be paying taxes on a deposit that we put into the company. That wouldn't be good. So if we have a deposit from us, then we have to recognize that. So when you're on a cash basis system, just note that if the bank feeds actually show who you're getting the deposit from, like if it's an electronic bank feed, you're working with online platforms possibly, or Amazon or something like that, then the bank feed might show who the deposit's from. If, on the other hand, you're simply recording deposits, grouping them together, recording them, you may not have more detail about the deposits, the assumption then being every deposit that goes into the system will be income. It's going to go to income. However, you need to break out any deposits that aren't income. The two kind of deposits that typically would not be is if we, the owner, put in a deposit to the company to grow the company, or if we took out a loan to grow the company. Those are two types of deposits we want to make sure that we don't put in as income. So we're going to say that this first one here is a deposit from the owner. If it's not income, how are we going to put it into the system? So if we open this up, we just want to make sure that we're not hitting an income account. What account should we be hitting with it? We should be hitting an equity account. Now again, you could add a vendor or a customer, but it comes from the owner. So this might be an occasion where, you could put your own name in it or the owner name or something like that for a vendor or customer name. But it is one occasion you might not have a vendor or customer there. So then we're going to select the drop down. We're looking for an equity type of account. That's the key. No expense, no income. We're looking for equity. So here's the ones provided to us by Intuit or QuickBooks when we make up the account. We could put it into capital, or they might call it retained earnings. QuickBooks has another account, however, that's going to track the investments separately, that being the owner's investment, and it's an equity account as well. That's fine. You could put it into a separate equity account, and that'd be nice. It's a good thing to do. They have that set up for us. That's where we're going to put it. So it's not going to affect the income statement, so I'm going to just simply say add, and there we have it. If we go back to the balance sheet then, and close up the old hamburger, hold down Control, scroll up just a bit to that 125, go into the checking account, we'll see then that the deposit should be increasing the checking account. Scrolling down, we had the deposit here, but it's way up here on the third. It's on the third. There it is on the third. And then if we go to the right, there's the deposit. If it's the $65,000, if we click on it, it's going to take us, of course, to the deposit screen. So it's in a deposit screen. Scrolling down, the deposit is this item down here. The other side going to the owner investments. So I'm going to close that back out. The other side going to the owner investments. Scrolling back up top, that is going to be a balance sheet account rather than an income statement account. And that is the point. We're going to be going down to the equity section then. Scrolling down to the equity section, we see the owner investment. So there is the owner investment. Clicking on the owner investment, then going to the right, we see the $65,000. Again, this mirrors what we did in January. So we had the same kind of thing happening in January. When we did it in January, we deposited directly into the account. That's typically the way a deposit will be. So if you're on a cash basis or accrual basis, this will basically be the same kind of transactions. The only thing you need to catch with the bank feed is just to make sure that you pick up any deposits that come from yourself and not put it to income, because the other way it would go is it would be increasing cash. And if you just follow the normal system, you would put that deposit to income, which means it would increase the income account, increasing net income. And again, that could make your income statement distorted, look too good. You'd look better than you're really doing in terms of performance. And for taxes, the taxes would say, hey, you're doing better. We want, our share of that as well. So that would be bad for taxes. It would overstate possibly the net income, possibly the taxable income. So same method, but if you're using the deposits to just simply record to income, just make sure you identify those that are coming from non-customer sources, typically from yourself or as the owner or owners, as well as possibly loans as the other major source of a deposit that should not be in the income section.